This is Eric Mwathe with Mwathe.com. It is August the 5th, 2011, after the close of what was a huge down week for the market, in which we saw the Dow lose about 700 points at the end of the week. At some point, the Dow was down about 800 points, give or take. This is not surprising, as we've been discussing in my weekend videos. Any time this market was going to break through our resistance, hold on here, let me get this right. Anytime this market was going to break resistance on the weekly chart for the Dow, which connects this, which is the red line showing here, anytime we broke through that, we had talked about that the market would have a significant move lower. Again, this connects an area which connects the March lows and the lows of 2010, and you draw a straight line. We broke through that this week, so it's not surprising that there was a lot of selling, fear, people getting out of the market. And I believe this is not the end. We might have rallies here and there, but now it seems to me that the market has changed its mode. The mode seems to be more poised to the downside than anything. Now if we move on here, let's take a look here at the banking index, which I have to admit seems to have lost its way here as it moves to new fresh 52-week lows, and there is no bounce seen here. In other words, this market could bounce a little bit, but eventually we are going to be seeing fresh lows in the coming days and weeks. This is a severe break. Moving averages are now pointing low, especially the 50-day moving average. I don't see any bounce in this banking index either. As we had talked about before, one of the worst markets that has been leading this, one of the sectors in the market that has been leading the market lower was the airline index, which broke down sometime in July. And I've been talking about this being, to me, was an indicator. So once it broke down here about 3 weeks ago, breaking about just below 40, once it broke that support line, it's been straight down, and I've been speculating this would push the market lower. Sometimes the airline index tends to be a leading indicator, and in this particular instance it was perfectly playing ahead of the market, and the market is now trying to catch up. It's been again, here's another market here with the RSI trading at 14. This is an area where you don't expect a bounce, and I believe any rally here, wherever it goes, is going to be looked at with a lot of suspicion, because I think eventually we are going to be making fresh lows on the airline index, and I will not be surprised that this market also follows to the downside. If we take a look now at the IYR, which is the real estate index, again it broke down. Remember, we talked about this in over the last couple of weeks and months, that this instrument kept making new highs. It was making new highs in price, but the corresponding technicals were weak, and we've been speculating that that would lead to a sell-off down the road. And as you can see, this was what it was predicting, this big drop. So every time you see an instrument make new highs in price, yet the technicals did not follow through, you have to be really on the lookout for a massive sell-off down the road. Again, we can see a bounce here, but these instruments to me seem broken. They are going to be challenging fresher lows in the coming weeks and months. Take a look at copper here, which was down. Again, I don't think I was trying to find something here on the, I'm going to skip this one for now, but again, copper was down, another leading indicator in the market. Those of you who are playing ultra short ETFs, because crude oil was lower, and if you are playing the DTO, which is a 2 times bear ETF that tracks the crude oil market, you'll notice that now the RSI is moving to almost 2-year high. So again, there's a lot of indication that this market is continuing to be trading lower, and some of the ultra short ETFs were posting huge moves this week, with a great breakout on the short-term basis. Now we take a look at the VIX, fresh 1-year high. Now I don't think it's gonna necessarily have to stay up here. It could have a sell-off, and the VIX has a tendency of having sharp sell-offs, like it did in May of this year, March of this year. So we need to be on the lookout for sharp reversals on the VIX. But as of now, we go into the weekend knowing that the VIX is telling us this market is changing its stripes. There's fear in the market. Could change, but it has not yet changed. Could change, and the only way it can change if the market can put in and record some great moves to the upside over a period of time. And since we haven't seen any strong bounce, we only have to conclude that this market is in trouble until it can prove itself being capable of holding and sustaining a reasonable bounce. Again, one of the markets, and we've been talking about this for weeks now, one of the markets that led this market, the general market lower, was the Brazilian market. It broke down about to fresh lows about early this week, but it had broken its trend lines going back to I would say around April. Once it broke down there, and once the moving averages started pointing lower, which is the 50 and the 200-day moving average, once those were pointing lower, this one was leading and telegraphing that the general world markets could be seeing a move lower. Now granted, the move has come very fast and very quickly, but like I said last weekend's video, I said that there was a possibility the market was going to start moving lower in chunks. I mean, hundreds, 200, 300, 400 points at a time, and this has been realized almost a couple of days after I made those observations. And now here we see that the French market straight to fresh 52-week lows. Any bounce is going to be looked at with suspicion. All the moving averages are now starting to point lower. So even the French market has just moved straight to fresh 52-week. Actually, it's more than I would say more than year and a half fresh lows on the French market, and that's never a good thing. Again, you see the French market on a weekly chart. Man, this thing is now challenging prices it last saw in 09, July of 09. So we are back to July of 09 territory. Not good. Now we could see bounces here and there, but longer term, it's a lot of work is going to have to be done. Maybe sideways action for a couple of months, but there's no straight rally to the upside. I don't see that on the charts. If it happens, then the charts are going to change, but for now I don't see it. Again, you'll see on the French market we broke down this black line here. Once we broke that black line, the sell-off was in play. There was no other way other than down. Now we take a look at the FTSE. This one is fresh, almost close to a fresh 1-year low, but what is important is how we've pretty much given almost 1 year of gains in about 2-3 weeks. It doesn't take much to destroy a market, and that's the discouraging aspect of a stock market. It doesn't take much to break down a market, just like you can see in this particular instance. This last week was absolutely devastating, but it was not surprise. Honestly, we've been talking about that possibility for a while. In fact, probably since May. Now here's again the FTSE, again straight breakdown, almost 10% for the week. Any bounce here has to be looked at with a lot of suspicion. Yes, they might bounce, but until this market changes those charts seem absolutely broken. Now let's take another market here, which is the Australian market. These are fresh 52-week lows, down about 7.3% this week. More importantly, if you follow the blue line here, we've broken the trend, and as far as I can tell, this is a game-changing scenario here. To me, seems like bear market territory. Don't see how things change here. Take a look at now. Anyway, so I just decided to make this video as brief as possible, but it seems to me that there's a new game in town. Now if we take a look at the Dow Jones, see whether I can get this right. Dow Jones, and this is the 1 year for the Dow Jones. And what I want to point out here is we have broken this blue line. This is a 3-year daily chart for the Dow Jones, and if you take a look at the RSI, we've broken this trend. This blue line was support for many months as the market moved higher since the March 09 bottom. As of now, we've broken that trend right here, and that tells me there's a new game in town, which is markets are going to find it very difficult to rally. This is Eric Muather with Muather.com. Peace and blessings.